Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news investors have had enough of high valuations unsupported by the real economy. For today at least, risk is off. Firstly, the US trade deficit has come in at a terrible $63 billion for July, the worst result since 2008. Exports were down more than 20% from the same month in 2019. Imports were down 11%. The tariff war is having no impact on imports from China because the US deficit with China went up to $32 billion for the month, the worst, and that's worse than for June. The only impact it is having is that Americans are paying more for those imports, and ironically, they purchased 8% more from China in July than in June. The Chinese purchased 2% less from the US in the same period. The US is running a busted trade policy, although that comes as no surprise to anyone but about 3 people. Initial US jobless claims were 881,000 last week, which was slightly lower than expected. The total number now on jobless benefits dropped 13.25 million, a decrease of 1.25 million, as increasing numbers of people lose their social support entitlements. US job cuts so far this year have surged 230% compared with the same period in 2019. The combination of the dire trade balance and the toxic direction of unemployment support has been too much for investors, and markets are down very sharply, with the Nasdaq down 5.3% so far today. All other indexes are also down sharply. Today, no one is buying the dips, not yet anyway. China's private sector PMI for services came in marginally lower in August than for July, expanding at a PMI of 54.1 as normal business conditions return to China. A feature of this report is the shift in the employment component into expansionary territory. And traders are watching the copper price as China's demand is rising and supply is not. And the iron ore prices just keep on rising and rising. And France has launched a €100 billion economic stimulus package to kickstart their coronavirus-damaged economy. Its investment will be focused on green energy and transport. The US Treasury 10-year yield is down 3 basis points today to 0.62%, and the price of gold is down again, down $9 today to $1,932 an ounce. And oil prices are slightly lower today. They're down to $41.50 a barrel in the US, and the international price is down slightly less to $44 a barrel. And the Kiwi dollar is lower today as well. It's given up some of its recent gains to be at 67 US cents even. Against the Australian dollar, we've dipped to 92.1 Australian cents, and against the euro, we're half a cent lower to 56.6 euro cents. That means our trade-weighted index has softened to 69.9, but still above where it was this time last week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.